Hello, congratulations, you made it here. Welcome to another exciting topic that we're going to be looking at when it comes to trading the global financial markets. When we say global financial markets, I believe we all know what we mean by that. You talk about forex, you talk about crypto, you talk about stocks, and the rest of them like that. So we're going to be looking at a popular strategy. Sometimes I like to call it the father of others. Price action trading strategy has given birth to a lot of strategies. There are different strategies used in trading forex now that were born, or they are like a subset of what price action stands for. So when we say price action trading strategy, this simply means trading what you see, all right? Reading price as it is, okay? You're the one that is reading meaning to what price is saying. It's not like you are relying on any third party indicator to give you a reason to take a position, whether to buy or to sell. So that's what price action is all about. Reading meaning to price. Okay, understanding what your chart is saying, looking at the chart and being able to interpret, or write a story about what is happening on the chart. So that is what we are going to be looking at. And I have four approach to a price action trading strategy. This is a simple, four approach that you should take when you are trying to trade the forex markets using price action trading strategy. It's a simple strategy. It just needs you to understand what price is saying. All right. So the first thing you need to understand when you're trying to, use a price action trading strategy is you have to understand your market trend. Yes, market trend. And after understanding your market trend, you should then understand what structure is saying. Some of you will be surprised. What am I talking about? What are you saying? What do you mean by market trend and structure? Yes, they are related, but they are not exactly the same. Okay? Yes, you might have an uptrend, market going in an uptrend for a long period of time. Okay, let me say when you talk about market trend, you can say uptrend, downtrend, or you have a sideways market or a ranging, price action. So those are the three things: uptrend, downtrend, or sideways. Some call it accumulation phase, some call it ranging phase. It's still the same thing we are trying to talk about, okay? But when you talk about structure, this is you now looking closely at that trend and being able to understand that, okay, is there a possibility that this uptrend that I'm seeing is about to change? The structure is about to change. That's when you now take note of the highs and the lows that are being formed. So let's look at it. This might be your trend. You're having an uptrend, clearly an uptrend. So if I should ask you about this trend, you still tell me that, well, this is an uptrend because you cannot say you've established a downtrend yet. All right. But then if you now look closely, so let's take this eye up. So because the price action, you can see it moving upward. You say, oh, this is an uptrend. But when you now want to look closely, that's when you want to understand what the structure is saying. Probably we are now going to be seeing a possible change in structure, and then downtrend can now be formed. What do I mean by this? You have this low and this high, right? Then we'll call this low higher low that broke this one to create higher high. So in an uptrend, you're going to be having higher highs and higher lows, or in a bullish structure. So when it comes to this trend, I would say it's an uptrend, and currently we have a bullish structure. So this is another higher low, broke this high to create another higher high. higher low, broke this high to create another higher high, higher low, broke this high to create another higher high. So we can agree that yes, currently what we have here is an uptrend and a bullish structure. Okay, now this was the last higher low that was created and went ahead to create higher high. So we expect that we're going to create another higher low, higher high for this, bullish structure to continue, for this uptrend to continue. But if we note, if we look at it closely now, we can now see that this low has been broken and we created a lower low instead. This signifies a break of structure. All right, this first break of structure is what can give us that hint that yes, we might now have a downtrend, possibility of this market switching from this uptrend to a downtrend. So it is that market structure, it is a structure that is going to first give you the hint. Okay, it is after they've played out for a while. Let's say we now start seeing things like that, is when you can now clearly say, oh, we are currently in a downtrend now. All right, but with structure, you'll be able to understand or get an hint as to what price is trying to say. So that is the difference between trend and market structure. Both of them, you can say they are the same, but at the same time there is a slight difference between them. Okay, but they both work hand in hand. So that's the first thing you should do when you are trying to approach price action. Understand your market trend and your structure. Now, the second thing you need to understand or to identify is your zone of support or resistance on higher time frame. And mostly it has to be in the direction of your structure. When we say in the direction of structure, it means you are taking continuation trades. Okay, yes, you can trade reversal, but it is advisable for you to trade continuation most of the time. Why should you trade continuation? Because you are trading in the direction of volume, you're trading in the direction of the banks, okay, and you are less likely to hit stop loss when you are trading continuation compared to when you are trying to take reversals. Okay, so mark your zones of support and resistance on higher time frame. So if the market structure is bullish, you should mark support. Focus on identifying your support zones. Okay, avoid looking for resistance because price is bullish. Try to mark support zones. Okay, so if I have a bullish price action, I can see that price is trying to move up like this. So the best thing for me is not to be looking for where I can sell. The best thing is for me to look for where can I continue the buys. Okay, where can I continue the buys? So marking your support zones, that should be the best thing that you should do. So you'll be hoping that okay, once price approach these zones or these zones, is going to continue to the upside. So avoid trading reversals as much as possible. This is one of the mistakes that we make when we are trying to trade price action. When we say price action, we said we want to trade what we are seeing. So trying to catch a reversal when the trend and the structure is bullish is like you are trying to instruct the market about what to do. Instead of you instructing the market, you should react to what price is saying. Okay, if price is pointing buys for me, I want to react to that and look for buys. Okay, when it's time for it to reverse, it is still going to give you those signals for you to take the reversal. So the third thing you should look out for, they are chart patterns. Look out for chart pattern formation. All right, after identifying your zones, if you can see a chart pattern, fine. If you can't spot a chart pattern, it is still fine. It's not compulsory that you have to see before you're going to take a trade. You must look for chart pattern. Your zones of support and resistance are enough, combined with the last one that I mentioned here, candlestick confirmation. So if you're looking for candlestick confirmation, you should wait on lower time frame for your confirmation. Why should you do that? If you're on the 4-hour, like I said, mark your zones on higher time frame. So let's say you marked what's it called, your zone now on a 4-hour time frame. Yes, you can wait on that 4-hour time frame for your candlestick confirmation, but it won't be smart enough because for a 4-hour candle to fully form, if you go to 1 hour, you would have seen 4 different candles, 4 different candles on 1 hour we make one candle on a 4-hour time frame. Okay, so it might be that after 2 hours, after two candles had formed on 1 hour, you must have seen, let's say, a hammer signifying a confirmation for buy. And for someone that is still on the forward, the person will still be waiting. While the person waiting on 1 hour had entered that trade, like 2 hours ago, and is already making money. Whereas you are still on the 4 hour waiting for that candle to close. Before you can take a decision with a candlestick confirmation, that candle has to close before you're going to be able to say, okay, this is a doji, this is an engulfing candle, and the likes of them. Okay, so now let's take all these into the chart and see if we can work with what the things we just mentioned now. All right, so if I'm seeing that the trend is bearish, let's look at this one now. The trend is bearish, all right, because you can see that we kept making. Let's try and identify that. Let's start from this low, broke this high, right? We create a new higher low again to create higher high. So here we could see that the structure is bullish and the trend is bullish. But it got to a point, this was broken. So this was the point where we had a bearish structure, all right? The trend has not fully been confirmed, but here it has given us an hint that yes, this structure is going bearish. So at that point now, it means I will now have to start looking for sells. Okay, we had another high formed, then that high too went ahead and sold. Okay, you can pick this one too, and broke this one to create a new lower low. So we had lower high and lower low form. So it means I can easily now draw this. I can draw a trend line resistance. Since my structure has established that yes, we might have a sell, I can draw a bearish trend line like this. So on the third touch, I would have taken a sell from somewhere around here, place my stop loss on the next high, this high, all right? So then my TP will be below this low, and then you would have been able to catch like a 1 to 3 just based on understanding your structure, your trend, and identifying your zones. This zone, you can also see this was acting as a kind of resistance before price broke out, and you expect it to act as a support zone, but it didn't. So as soon as price trade below it, you can still continue using that zone as your zone of resistance. All right, so it's just like you have if you look at it, you can also see chart pattern, head and shoulder, left shoulder, head, right shoulder. Can still look more into that. All right, so trading in the direction of the market is worth it. Now another thing you should note when trading support and resistance zone is the more they touch, the weaker that zone becomes. So let's say after this third touch, you manage to take the fourth touch. You shouldn't attempt the fifth or the sixth one. In fact, 3 touches is enough. Once a support zone or a resistance zone has been tested like 3 times, fourth time, that is enough. Move on to another pair, because market is going to try to take liquidity. That zone now is the zone of liquidity, because the more they touch, the more liquidity are forming. You have a support zone being tested 5-6 times. It means price will be high in that zone to take the liquidity before continuing in whatever direction it wants to go. Okay, so that is why you should avoid trading the fourth or the fifth touch. So just mark your zone on higher time frame, and you can take entry on that higher time frame. But then remember, we said we should look at lower time frame for confirmation. All right, if we should look at this closely, let's look at the candlestick here that we'll use for sell. Let's see what kind of candlestick confirmation it is. This is 4-hour time frame, remember. So if I'm to take a sell here, I'll be taking a sell based on this candlestick. Like, okay, a spinning top, then I enter. So I'm using this line as okay, this will be the close of the candle. This is where we enter from if I'm trying to make use of 4 hour time frame. Or some will say, okay, this sell candle engulf this buy candle. Let's say the entry is here on 4 hour. If you go to 3 hour, you see that you can get a better entry, or 2 hours. So let's try and do a countdown, looking for candlestick confirmation on lower time frame. So I don't advise you to go below 30 minutes so that you won't get confused. So let's go back to that zone and see on 3 hour if we would have gotten a better confirmation. We would have gotten a better confirmation. Okay, I think I ought to circle the place, but we'll still get it. So this is still the zone. This is the candle zone that we are working with. So for 3 hours now, let's see. I think the entry will most likely be the same. We can see this spinning top. Some call it a doji, but it has a small candle body. But there's no clean confirmation on 3 hours. Let's look at 2 hours. We'll be able to get one. So it is simple. Just try and backtest as much as possible. Pick different charts, then try to look at them and see if you can be able to bring together some of those points. So with 2 hour or on 2 hour time frame, let's see. I think all of them are almost around the same zone. So for these two, I think you would have seen the spinning top for your confirmation, or a long leg doji. So the entry will be slightly above that of 4, but that's still not a significant difference. But there's some confirmation. In fact, most of the time you're going to get better entry, better price for your buy or for your sell when you make use of lower time frame for your confirmation, and then you won't have to wait for long period of time before you're going to get that confirmation. So once you mark your zone, it's not a must that you have to go to lower time frame, but it is better for your risk to reward, to have a very good risk to reward. So you wait on lower time frame for confirmation. If you look at this zone, this is a zone of support. So let's say this touch, and this touch. This third one on 4 hour now, you're seeing this hammer as a confirmation, and you have gotten your entry from here by the close of this 4 hour candle. But if we go ahead to, like, let's say 1 hour, let's see if we get a better entry. Okay, it's still almost the same, but you see a better entry compared to that. This hammer 2, this would have been your entry, which means you'd have entered earlier than someone waiting on 4 hours. Let's check 30 minutes. We'll get something better. For 30 minutes, I think this is engulfing. This is a bullish engulfing. So that have almost been the same. Okay, this hammer would have given you a better entry. This hammer right here, we would have gotten a better entry. So that is why it is best to go to lower time frame for confirmation. But you don't want to get lost. That's why I always advise a minimum of 30 minutes for your lower time frame candlestick confirmation. So you can keep an eye out for chart pattern. It might be a bullish flag, a bearish flag, might be ascending triangle, descending triangle, symmetrical triangle pattern. It can be head and shoulder. So whatever pattern it is, just make sure that you are looking for patterns that are more of continuations than reversal. And even though you are trying to trade a reversal pattern, let's give us an example now. If I'm trying to trade head and shoulder as a reversal pattern, let's say I have this. All right. So you can clearly see that we are in an uptrend, which means it's better to look for buy than to sell. So I have this left shoulder, this head, and this right shoulder. Because this is forming would not mean that, yes, immediately this form, then I will enter a sell. I will have to wait for something, which is the break of the neckline here, the support zone that I have here. It must break. Okay, and even though it breaks, I will not enter based on the break of that neckline, because sometimes instead of you seeing this as a breakout, it might be a fake out where price just manipulated this trend line liquidity, and then it will go ahead and start buying. So the best thing to do is, after the breakout, I will wait for price to come and retest this neckline, this support zone that will now be acting as resistance. Then after the retest, I will wait for a candlestick confirmation. If it comes, that is when I will now continue the sell. This is a reversal pattern, but if you look closely, you've taken that reversal pattern like a continuation, because now if you look at this is an high, this is a lower high, a lower low, another lower high to form another lower low. You can even see that you could draw a trend line resistance, which is showing a continuation, a break of structure already here, because this last low, this last higher low failed. So even though we call it a reversal pattern, you can approach it like a continuation. All right. So, but when you are now trying to sell based on the formation of the right shoulder, like, oh, I think I should sell from here, then you're taking a risky sell, because you might just get here again and continue the buy. You get my point now? So that is why it is better to look for continuation trade or approach reversal trades or candlestick patterns, chart patterns rather, as continuation. So in that manner, you're going to be taking less of stop loss and more of TP. So if we can, combine all these things that we've just talked about, understanding your trend and structure. Apart from understanding your trend and structure, make sure that you identify your zones on higher time frame, mostly in the direction of that structure. Look out for chart patterns, and then wait on lower time frame for your candlestick confirmation, and then you will be good to go. All right. So if you like this video, try and subscribe to our page, and then drop a comment. See you guys in the next video. Thank you.